We're here in Monte Carlo for the Rendez-Vous de Septembre. For AMBest TV, I'm Richard Banks, and I'm joined today by Stephen Catlin, the chairman of Convex, and by Paul Brand, who's the chief executive of Convex. Gentlemen, welcome.
Hi there.
So the last time that we got together here in Monte Carlo in person, Convex was a very young company. How's the reception been different this time?
Well, it's quite early in the conference so far, but you're absolutely right. Last conference that was here, Convex was about 4 months old, and we were very much explaining what our pitch was and what we were doing. This time, we don't have to do that. And I think we've been very fortunate over the last 3 years as to how we've been accepted by the marketplace.
Yeah, I think there was a lot of support back in 2019, but also probably a little bit of skepticism. Why is now a good time for another carrier to come to the marketplace? What are you going to do? How are you going to be different? Whereas, we roll forward 3 years and Convex is very well established. We're definitely part of the fabric of the market today.
And it's a very different operating environment now than it was 3 years ago, even than it was a year ago. What are the lessons do you think that we can learn from the last 3 years or so?
Well, the challenge of COVID-19 and virtual meetings, I think the industry got through it remarkably well. But that's all we did was get through it. For Convex, we had to employ 250 people virtually, which is a new and unwanted experience, frankly. We found that we are so much better in the same room together. It's much easier to be collegiate. It's easier to have fun, which is important. And it's easy to have constructive conversations.
The interesting thing about the industry is everything's always changing all of the time. And yet, in lots of ways, the fundamentals don't change. And being able to think about risk and reflect on downside risk events and really just manage your way through that volatility, I think, is the key lesson to take away from this recent period.
So given the challenges, economic challenges that the world is facing, Convex is as a new company, that presents some opportunities and some challenges. Can you talk a little bit about what they are?
Well, look, we're extremely blessed to have started when we did. Now, I think we claim a certain amount of foresight in terms of looking at the casualty market and where the market and the industry was going overall. Clearly, nobody thought about COVID-19. Now, we'd only been writing direct business from January before the lockdown. So our exposure to COVID-19 on the direct side is de minimis. We're exposed on the reinsurance side. But it is a real privilege to be in this market today with a clean balance sheet. And a lot of people say, God, I wish we could do what you do. And I said, well, we got very lucky.
Yeah, so I think challenge is always building the team, building the culture, because that's the most important thing to get right for a company. The opportunities, as Stephen alluded to, because we don't really have a legacy, because we've got a clean balance sheet, we're really looking forwards. We're not sort of scrambled up and sort of fixing yesterday's problems. And I think that is a drag on a lot of our competitors that we don't have.
Along those lines, people are starting to talk now about a genuine hard market. Now, you will have your thoughts on that, but a lot of people won't have experienced a hard market, a genuine hard market. You guys have. What are the surprises?
Well, that is true, but a lot of people haven't experienced inflation or sort of interest rates which are real rather than non-existent for the last 20 years. So, we notice in our firm that many of our colleagues haven't experienced a hard market. Some have. Very few experienced the 70s because I'm the old fart in our company, and I did experience that. And I think we do have a whole string of challenges. And in the UK, this last week has been in itself challenging for obvious reasons. We're spending time explaining to our colleagues what they're in for, how we have to behave, and how we have to treat brokers and how we have to treat clients. And then we're spending time with brokers, explaining to them, look, we are in a changing environment. And there's no point in pretending it isn't changing, because it is. So how do we explain to the client why it's changing and how it's changing?
And how's that message received by brokers and by clients?
Well, I think, as Stephen said, it's all about telling people actually what's going on and why things need to change, and why you can look at the shareholders' view of the industry, and it's not that healthy at the moment. There's an awful lot of companies that are trading at book or less than book, or struggling with sales processes, or various other things. So I think the need to change is obvious, but you should never lose sight of the long term. And we might be going into a hard market, but at some point in time, we're going to go into a soft market again. And how you've dealt with clients through the entirety of that process will be important.
We helped ourselves, actually, by doing the second capital raise within 18 months of the first. So we got $3.2 billion. And to get that out of the way, because we knew we had to do it at some point, and I've always worked on the basis a bird in the hand's worth two in the bush, to actually get it done. And now having all our focus on the future has in itself been immensely useful. And frankly, it's a magnet. I mean, the size of our startup is the biggest in the world ever. And we're very fortunate to have achieved that. Now we've got to make damn certain we make the best use of it.
So you talked about your capital raise there. It's an interesting question. What's the attitude of the investor community now towards the insurance industry, do you think?
Oh, well, we did the second raise by the end of 2020, wasn't it?
Yeah, exactly.
The end of 2020. I think a year later, the stance of investors had changed quite a lot. And we've had a couple of conversations this morning with people about, it is actually important for the industry that investors start to believe again in the P&C business. At the moment, some are losing faith completely. And you can understand why in terms of the results.
Yeah, I think the investors, they don't like things if they're not explained to them correctly. And so they've seen more volatility than they expected to see. I think when we went through a benign period of losses, probably ending in 2016, then actually people weren't really explaining, well, actually we've been lucky as well as skillful during this period. And now it's much harder to persuade people that the negative volatility they're seeing is something that the industry really has its arms around. Now that will change, and that will change if the industry actually starts to perform better, learn the lessons that it should take away from the recent past, and actually adapt to the future.
Let's talk about the future. You guys have been at the forefront of innovation in the insurance industry. Now, there's a criticism of the insurance industry that's leveled at it, that it's always trying to solve the last problem. How does it get on the front foot, and what have you guys got in mind?
The industry historically has been very reactionary and hasn't been proactive. It's extremely difficult to be proactive in this industry unless other people around you doing the same thing. But look, we have got challenges now that we haven't seen before, quite apart from inflation, rising of interest rates. Then we've got the aftermath of COVID-19. I mean, the one good thing about COVID-19, there's not much good about it, is I think the world understands systemic risk in a way it didn't beforehand. And the world understands that ultimately governments are the last port of call, and governments will step in that type of environment because they have no choice but so to do. Now, I think one of the things we need to do going forward prospectively is try and deal with some of these issues ahead of time. So, for example, as you know, Paul Re has been in existence since 2003 and has been a very successful public-private relationship in the UK. TRIA, likewise in the States, they have to be different with the different jurisdictions. But I certainly, for one, would like us to start thinking about the future, recognizing we've got systemic risk, pandemic, cyber, not yet, but coming climate risk, to name but three.
And are those areas of business that perhaps ripe for government intervention?
I don't like the word intervention. I prefer the word partnership, because the solution here is public-private partnership. So we're honest with government about what we as an industry can do and how much capital we can deploy, and they're honest with us as to what they can do. I'm a firm believer that we can be first loss for these situations for government. I'm a firm believer that the insurance industry understands risk mitigation, risk aggregation better than any other industry. And we should be working with governments on the way through. The trouble is, governments people who run governments often are only there for 5 years. So trying to get a politician to think out 10, 15, 20, 25 years is exceptionally difficult. And it's a sort of flaw of a democratic society.
That's probably not one that we're going to solve around the table in Monte Carlo. But gentlemen, it's been a pleasure talking to you. Thank you very much indeed for your time.
Thank you,
Thank you so much. Thank you, Richard.
For AMBest TV, I'm Richard Banks.